Thanks for joining us on this edition of Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first get a quick check of today's highlights. Korean startups have fared relatively well this year, especially in their shipments to the U.S. and Vietnam, despite a continued overall fall in exports. China takes another step forward in opening up its market by approving the launch of the Shenzhen-Hong Kong Stock Connect. These stories and more coming right up. Korea is committed to standing against a resurgence in global protectionist movements and taking a leading stance on the issue by engaging in bilateral talks and high-level meetings with other countries. That's the message from Finance Minister Yoo Il-ho, who said in a meeting with top economy and finance officials that the global economy faces new risks from growing protectionism sentiments stemming from events like Brexit and the U.S. presidential election in November. He says 2 out of 3 exporters in Korea's key industries already feel their businesses being affected by these measures, particularly due to anti-dumping policies adopted by the U.S. and India. In light of this, Yoo said related ministries should support vulnerable small and medium-sized firms by providing legal advice and sharing a database on import regulations so they don't face obstacles such as non-tariff barriers and unfair import restrictions. Korea's startup companies are doing relatively well selling their products and services to overseas markets. By comparison, the country's overall outbound shipments have been sagging due to the global economic slowdown. Our Kim Min-ji reports.
Despite Korea's exports falling for a record 19 straight months, the country's startups are offering a glint of light. According to the Korea International Trade Association, exports by startups came to nearly $10 billion as of the end of July this year, up 0.8% from a year ago. In July alone, exports rose 1.7% on year, marking the 3rd straight monthly rise. That's in stark contrast to the country's overall exports that have posted sharp declines. In fact, startups' exports have outpaced those of all firms combined in recent years. In 2014, outbound shipments by startups rose 9.5%, while those of all companies edged up just 2.3%. Last year, startups saw their exports jump 2.5%, while overall companies saw their exports decline 8%. The rise in exports of startups was attributed to increased shipments to the United States and Vietnam. Outbound shipments to the U.S. rose 5% thanks to a general economic pickup there, while exports to Vietnam jumped 11% as many Korean companies have their production bases located in the Southeast Asian country. Exports to Japan also soared 16.5%. The gains were led by key products such as semiconductors and mobile communication devices, which rose 7.6% and 23% respectively. Kim Min-ji, Business Daily.
Samsung Electronics share price hit a new high at over $1,481 a share on Thursday. Now, this comes after the tech giant reported its best quarterly profit in over 2 years in late July, propelled by strong sales of its flagship Galaxy S7 smartphones. Industry insiders predict Samsung Electronics will post an operating profit of more than $27 billion this year, topping the 30 trillion won mark for the 2nd time. Meanwhile, Seoul shares also edged up on Thursday, helped by eased worries about a possible U.S. Fed rate hike and a rebound in the shares of Samsung Electronics. At the closing bell, the benchmark Kospi was up a little over 0.5% to finish at 2055.47, while the tech-heavy Kosdaq also went up by 0.47% to end at 696.93. The local currency traded at 1,107.21 against the U.S. dollar. About 3 out of 10 bills in the Korean market are 50,000 won banknotes. The Bank of Korea says as of the end of July, over 70.4 trillion won or $64 billion worth of the highest denomination bills were in circulation, surpassing the 70 trillion mark for the first time on growing demand and increased supply. By value, 50,000 won notes made up just under 80% of the entire currency in circulation, excluding coins. Since the introduction of the target or the large note in June 2009, its supply has been on a rapid rise. According to BOK officials, increased demand for these notes has been partly affected by low interest rates and people's desire to hold on to cash. It has emerged that policymakers at the U.S. Federal Reserve remain at odds over the timing of an interest rate hike. The minutes of the Fed's July policy meeting released on Wednesday show some policymakers believe a rate increase will be needed soon, although there's a general agreement that more data should be reviewed before such a move. Some members anticipate that economic conditions would soon warrant taking another step in removing policy accommodation. The minutes showed that members of the rate-setting Federal Open Market Committee were generally upbeat about the U.S. economic outlook and labor market, but several said a slowdown in the future pace of hiring would erode the chances of a near-term hike. They're small and simple, but action cameras are incredibly versatile devices capable of documenting every split second. And with summer vacation season still in full swing, market demand for these high-tech gizmos are soaring. Our Lee Ju-young has more.
Whether you're jumping off a plane or catching the wave, action cameras can capture your adrenaline-fused moments like never before. It's this feature that's got stuntman Choi Jae-ok hooked on his device.
They are light and have good film quality. I can express myself by shooting from various angles and attach it anywhere on my body.
If before action cameras were more popular with individuals engaged in outdoor sports activities, they've recently been gaining popularity among the mass public as well. In fact, sales of these gadgets in Korea have grown nearly 100% every year since 2012, selling roughly 42,000 units last year. About 50,000 are expected to be sold this year. Korea's biggest electronics retail chain Hi-Mart says these versatile gadgets have been particularly popular among families and newlywed couples going on summer vacations.
3 years ago, only about 10 action cameras were sold a month at best. Now 20 to 30 more are being sold.
While tech firms GoPro and Sony had dominated the action camera market until now, other manufacturers are also looking to nab a piece of the pie. Olympus unveiled its pocket-sized TG tracker that has various impervious qualities, while Nikon has also introduced its wearable action camera Key Mission 360. Korea's LG Electronics is also in the game with the LG ActionCam LTE that allows users to stream directly to sites like YouTube Live without a smartphone.
Built-in LTE connectivity lets people upload sports activities and scenes from hiking trails in real time.
Market watchers say this action cam fervor is not going to end anytime soon and is only projected to heat up further down the line, especially since cameras will start being combined with smartphones and various wearable devices. Lee Ju-young, Business Daily.
China has opened the doors to its financial markets a little wider as the government gave the go-ahead to the launch of the long-anticipated Shenzhen-Hong Kong Stock Connect. Local stock exchanges and securities are ready for the connection, and market expectations are high. Take a look.
The share trading link between the Shenzhen and Hong Kong stock markets is expected to be up and running within the year. Chinese Premier Li Keqiang said Tuesday that connecting Hong Kong to China's mainland markets is a positive move that shows Beijing's capital market is becoming more global and more market-oriented. The new Stock Connect will give foreign investors access to roughly 880 Shenzhen-listed shares, up significantly from the some 500 available on the Shanghai-Hong Kong link. This will give offshore investors more exposure to China's healthcare, information technology, consumer goods, and materials sector. As authorities continue to grapple with heavy capital outflows, China expects the newest stock link to help entice more foreign investment while encouraging local equity investment as well. Although the actual launch of the stock link is unlikely to bring in a massive influx of funds, Analysts say will give mainland Chinese investors more options outside of weak onshore markets. The link is also expected to provide investors around the world with more ease in accessing China's new generation of private sector companies listed on the Shenzhen.
And to tell us more about this, we have Professor Kim Se-wan from Ewha Women's University joining us in the studio today. Hello, Professor.
Pleasure to be here.
All right, so let's first take a look at the Chinese stock market. I mean, although China is the world's second biggest economy, its markets are still under relatively tight control. So in addition to the Shanghai link, what do you think it's looking to achieve through this new link?
Well, first of all, Chinese stock market is separated from between three markets, Shanghai, Shenzhen, and Hong Kong. So if we add up the three markets, the market value amounts to almost 10 trillion US dollars.
Wow.
So that's going to be second largest stock market in the world as a whole. In the past, actually, Chinese government has been very much protective on the ownership of Chinese companies. And that's why they gave a huge and complicated restrictions on foreign investors. However, as Chinese economy is growing up, they recognize that it is very important to open the stock market to foreign investors. So they decide to open their stock market of Shanghai in 2014, and this time for Shenzhen.
Now, what can we expect then from the Shenzhen-Hong Kong Stock Connect once it opens this year?
Well, the protocol of the market opening will follow exactly the same as that of Shanghai's.
Okay.
So that means foreign investors previously were not allowed to buy Chinese-only stocks, or we call it by Group A stock. So after opening Shenzhen's market, foreigners are allowed to buy Chinese-only stocks or Group A stocks from now on through the brokerage companies of the Hong Kong. So Shenzhen Stock Exchange is something like a NASDAQ of the United States and Kosdaq of the Korean stock market. So quite a few IT and biotech companies are enlisted.
Now, the Shenzhen trading link is being modeled after the Shanghai-Hong Kong Stock Connect, which was launched back in 2014 November. So has that been successful up until now?
Well, there was a huge inflow of the money to Shanghai market in 2014. But as we know, there was a serious roller coasting market in 2015. So that was something bad experience to foreign investors. So Shanghai stock market index, for example, has been dropped to 3,000 level from 5,200 level. That's about the 40% negative return. So even though there are some ups and downs in the stock market, Chinese government sees that opening the market is very important step for the development of the stock market.
Now, how effective then do you think this new link will be in opening up Chinese markets globally?
Well, as I said, foreign investors had just last year has a bad experience with Chinese market, which is almost collapse of the Chinese market. So they will be kind of very cautious on Chinese stock investment. Instead, in the long run, they will be more interested in merging high-tech companies in Shenzhen, particularly institutional investors like investment banks and securities companies are very interested in Shenzhen Stock Exchange enlisted companies.
Now, I know there are a lot of expectations over this new link, but there are also still concerns over the high valuation of the stocks being a major setback.
Right. I'm actually glad that you pointed out that problem. It looks that there is some bubbles in Shenzhen's market. For example, as I pointed out, there are quite a few high-tech and biotech companies in Shenzhen Stock Exchange. So there are too much expectations, which is exaggerated on their future performance. So, for example, the price-earnings ratio, which is very important variable that we assess the existent bubble in the market, is about 90 for some companies, but global average is between 20 to 30. So that means Shenzhen Stock Exchange enlisted companies' prices are too much exaggerated against their profit. So that's going to be a problem.
Now, what impact then will the launch of the Shenzhen-Hong Kong Stock Connect have on the Korean stock markets?
Well, unfortunately, Korean investors had two bad experiences with Chinese stock market. The first is they lost huge money through Chinese economy-related mutual funds in the middle of 2005 and 2006. And second is last year's almost collapse of the Chinese market. So I don't think that Korean investors are really rushing to Chinese market. Instead, as Chinese economy is recovering, they will be more interested in the Chinese stock market.
Well, we'll have to wait and see what this is going to bring to the rest of the world as well as the Korean stock market.
Exactly.
Thank you so much for coming in today, Professor.
Thank you for having me.
And that brings us to the end. Thanks for watching, and we'll be back tomorrow with more business news that matters to you. Until then, goodbye.